From our studios in Atlanta, this is CBT News.
The Kerrigan Advisors Market Update, brought to you by Kerrigan Advisors.
Ryan Kerrigan is the Managing Director of Kerrigan Advisors and joins us now to update our viewers on the buy-sell report, the Kerrigan Advisors Market Update. Ryan, thanks for joining us today.
Thanks, Joe. Good to be here.
All right, so Ryan, let's talk about the Kerrigan Index. How did it perform in February?
The Kerrigan Index was down significantly in January, down 13.6%. This is underperforming the S&P, which was down just 3.9%. Each of the 7 component stocks was down, led by Lithia, which was down 16.9% for the month. So this gives back all the gains that we had in January when the index was up 12%.
What was the key driver of the index's negative performance?
The key driver, we think, was a soft sales month, with February SAAR coming in. The estimates range from 16.7 to 17.1 million units, so that rate is significantly lower than the January and December run rate.
Any good news to report on?
Yeah, there absolutely was some good news. For over 4 years now, we've seen incentives climb month after month after month. And for the first time since 2013, we actually saw average incentives were down $14 per vehicle in February, according to J.D. Power. Now, that's not a big amount, and it was tied primarily to incentives for domestic trucks, but at least we finally broke that trend of incentives getting larger each and every month. We also had fourth quarter for the publics come out in February as well.
And how did those come out?
Quite well. Revenue for each of the publics, with the exception of Asbury, was up year over year, and earnings for each of the publics, with the exception of Asbury, was also up. In fact, in the fourth quarter, Group 1's earnings increased 250%, and Penske was up almost 300% over the prior year.
Ryan, what is driving this great performance by the publics?
It's a great question. There are a couple things, but much of this great fourth quarter performance was driven by one-time gains associated with the new federal tax code for businesses.
So what was the direct impact of the new tax code to the publics?
The aggregate one-time gain for the group from tax reform was over $400 million. So this is very significant additional cash that can be invested by these publics and used for additional acquisitions.
So how did the public's operations perform?
Operations were very strong for the fourth quarter. Each of the public companies reported very strong same-store sales, even against an industry that was off 1.8% in the fourth quarter. Same-store sales at AutoNation were up 4.2%, Group 1 was up 4%, Sonic was up 4%, so overall the fourth quarter was a very good quarter for auto sales for the publics.
Okay, so what about F&I? We know the publics focus a lot of their attention to this, right?
The F&I strategies are working really well for the publics right now. For some time, they, as a group, in particular AutoNation, have really focused on growing F&I penetration and F&I margin, and that's really starting to show in the numbers for them now.
So the public auto retailers are performing well?
Yeah, they certainly are. For the most part, they had a very solid 2017. It's worth noting that Lithia, which has been the most acquisitive in the last 2 years, grew their top line by 16% in 2017.
And what is the outlook for buy-sells in 2018?
Well, we've never been busier. The trends that have been generating buy-sell activity in recent years are only accelerating from our vantage point. In a big fragmented market such as auto retail, there's always going to be transactions getting done. Even if the whole period is a generation or more, there are just so many auto dealerships, 17,000 in fact, that there's always going to be transactions. That said, we are seeing more and more dealers and their families seeing that our industry is in for big change, causing them to evaluate their strategic options.
What is attracting buyers then to this changing retail space?
Well, buyers today are attracted to the efficiencies of operating ever larger dealership groups. They also have access to deep capital to invest in new technology and bringing new approaches to the business of selling and servicing cars. Some buyers are attracted to the fact that there is so much change occurring in this big industry. Interestingly, the reasons that is triggering some to sell, that is big change, is the exact same reason that's attracting others to our industry.
All right, Ryan, in past segments, you've mentioned international buyers coming into the U.S. market. Can you tell us any more specifics on that?
No, not quite yet. We're getting very close to announcing 2 transactions with new international entrants to U.S. auto retail, but these deals take some time, so I can't announce them quite yet, but I promise I can say more the next time that we talk. But this is an important trend. Just this week, we met with yet another very large non-U.S. automotive firm that is very seriously evaluating transactions in the United States. So as dealerships are considering a sale in the U.S., it's great that we've been able to really expand the buyer pool to even include international buyers now.
So deals are getting done. Can anyone sell?
Great question. Unfortunately, it's not quite that easy. While the transaction market remains very healthy, there are some key issues that prevent deals from closing, and I'll mention just two. First, many dealers posted record performance in 2014 and 2015, and those margins are just gone. Today's deals are being benchmarked off of today's performance, not 2015. Secondly, falling earnings can really complicate getting a deal done. When a buyer stepped up to an aggressive valuation, earnings that are down, even just a little bit, can really undermine getting a deal pushed past the finish line. So these are just two examples of current challenges I'd mentioned in the marketplace today, but overall the picture remains really solid.
All right, Ryan Kerrigan, thank you so much for your insight. It's always great to hear what's happening in the buy-sell market.
Of course, Joe.
Hey, when will the 2017 year-end Blue Sky Report be released?
We're releasing the Blue Sky Report in the coming weeks. It will cover transaction activity for the full year of 2017, dealership profitability, acquisition activity, real estate, and tax reform. So please go to our website, KerriganAdvisors.com, request the report. We're more than happy to share it with you.
Great. I'm sure our dealers will take advantage of that. Will Kerrigan Advisors be at NADA this month?
Yeah, we will be at NADA. We're conducting a workshop entitled The Future of the Dealership Business Model. So again, please visit our website and we're more than happy to get you the details.
Super. We look forward to seeing you there. Ryan Kerrigan, Managing Director of Kerrigan Advisors. Ryan, thanks again.
Thank you, Joe.
Thank you for watching the official news source of the retail automotive industry, CBT News.